Hello everyone. In the last session, I discussed the question number 1 in the tabular form, that is the amount of capital to be redeemed is 5 lakh, that has to be redeemed at a premium of rupees 1 lakh. For the purpose of redemption, the company issues equity shares at a premium of 50%. 2,50,000 is the proceeds from fresh issue and 1,25,000 is the premium on issue of fresh equity shares. As 2,50,000 is the proceeds from fresh issue, remaining 2,50,000 has to be transferred from divisible profits. It means nothing but we have to create capital redemption reserve out of divisible profits. The divisible profits available for creation of capital redemption reserve are profit and loss account and general reserve. The profit and loss account balance available is only 1,30,000. Remaining amount has to be transferred from general reserve to the extent of rupees 1,20,000. As we know that while explaining the theoretical aspects, I explained all the accounting entries to be passed in the books of a company which goes into redemption of preference shares. So, I categorized whole entries into 4 sections. First one is fresh issue. It may be issue of equity shares, preference shares, or it may be issue of debentures, or if there is any sale of fixed assets, it comes under the first step itself. Second step is premium on redemption has to be provided for. Premium on redemption has to be provided for. The third step is to create capital redemption reserve, and a fourth step is dealing with actual redemption of preference shares. This table helps to you to pass all those entries under each step. See the first one, fresh issue. Here we are having the proceeds from fresh issue along with the securities premium. That figures will help us to pass the entries under the first step. What's the entry for issue? Bank account debtor to equity share capital account. As the shares are issued at a premium, securities premium account has to be credited. The amount is available here. So, this will help us to pass the entries in under first step. And the second step is premium on redemption has to be provided for. It has to be provided for out of securities premium and or divisible profits if required. See here, 1 lakh is the premium on redemption. The securities premium account balance available is 1,25,000. So, entire premium on redemption can be provided for out of securities premium itself. So, we can consider these two amounts for passing the entry under second step. Go for third one, creation of capital redemption reserve. Capital redemption reserve has to be created out of profit and loss account and general reserve. These are the two divisible profits available here. So, these amounts will help us to pass the entry under third step. Finally, we have to go for actual redemption of preference shares. So, for the purpose of redemption, we have to consider the nominal value of preference shares capital to be redeemed. Similarly, the premium on redemption. So, these amounts will help us to pass the entry under step 4. Let us pass all the entries now. When the companies issued partly paid shares, first of all we have to convert them into fully paid shares. How we can convert them? By calling the uncalled amount on preference shares. Here, those shares are of rupees 100 each, rupees 80 paid up, in the sense rupees 20 is uncalled. Now, we have to make the call or demand for rupees 20 from the shareholders, then we can proceed with the redemption. What's the entry for making calls? Whenever company calls its final call, 2 entries we have to pass, one for call money due and the other for receiving the call money. So, first entry for call money due, we can consider it as final call. So, preference share final call account debtor to preference share capital account. What's the call money due? The number of shares issued is 5,000. The uncalled final call is 20 now called. So, the amount of final call money is 1 lakh. This is the entry for final call money due. Next entry is for receiving the same final call money. Whenever we are receiving the final call money, obviously bank account has to be debited for receipt of money and preference share final call account gets cancelled while receiving the due amount. Preference share final call account. The amount received is 1 lakh. After passing these two entries, the shares are considered as fully paid. Now the company can proceed with the redemption. So, redemption entries. Which are the redemption entries? Under first step for issue of equity shares. Here in this problem, there are issue of equity shares, issue of debentures as well as sale of fixed assets. So, first entry for issue of equity shares. As the equity shares are issued at a premium, the entry will be bank account debtor to equity share capital account. Share capital account has to be credited with face value of the shares issued and to securities premium account. Securities premium account has to be credited with the amount of premium. So, face value of equity shares issued is 2,50,000. Securities premium is 50% of the face value, 1,25,000. So, total amount of cash received by the company is 3,75,000. This is the entry for issue of equity shares. Next entry is for issue of debentures. The entry is bank account debtor to, as debentures are 10% debentures, to 10% debentures. Debentures are neither issued for premium nor issued for discount here. They are issued at par. 1,000 debentures are issued at the rate of rupees 100 each. So, proceeds from issue of debentures is 1 lakh. This is the entry for issue of debentures at par. Next entry is for sale of fixed assets. Whenever fixed assets are sold, we are receiving the cash, so bank account has to be debited. And it was given that the fixed assets sold are of rupees 1 lakh, but they are sold for rupees 80,000. They sold at a loss. For every loss, profit and loss account has to be debited. Profit and loss account has to be debited for loss. So, profit and loss account debtor to fixed assets. As they go out, we have to credit it. What's the value of fixed assets go out? It is 1 lakh. The amount realized is 80,000 and the loss to be transferred to profit and loss account is 20,000. This is the entry for sale of fixed assets at a loss of rupees 20,000. First step is over. Now we can move to second step. As we know that the premium on redemption of preference shares has to be provided for out of securities premium here. So, the entry is securities premium account debtor to premium on redemption of preference shares. Premium on redemption of preference shares. What's the amount of premium on redemption of preference shares? 1 lakh. Obviously, 1 lakh has to be transferred from the securities premium account balance. To that extent, the premium account balance reduces while we are creating the provision for premium on redemption of preference shares. This is the entry for premium on redemption provided for out of securities premium. Next we can move to third step, that is nothing but creation of capital redemption reserve. As we know that in this sum, the capital redemption reserve is created out of profit and loss account balance to the extent of rupees 1,30,000 and remaining is out of general reserve to the extent of rupees 1,20,000. So, total capital redemption reserve created is 2,50,000. This is the entry under third step. Finally, we can move to entries relating to actual redemption. As I said in the previous sessions, we have to pass two entries here, one for amount due to preference shareholders and the other for actual payment. The entry for amount due to preference shareholders, redeemable preference share capital account debtor. As the redemption is at premium, it is a loss to the company. So, premium on redemption has to be debited as it is a loss to preference share holders account. So, capital to be redeemed is 5 lakh, premium on redemption in this problem is 1 lakh. So, total amount payable to preference shareholders is 6 lakh, and final entry is for actual payment. Last entry, actual payment has to be made to preference shareholders. So, as they are the receiver of the amount, preference shareholders account has to be debited. They are receiving the amount of rupees 6 lakh. The cash goes out when the payment has been made by the company too. So, bank account has to be credited with the 6 lakh. This is the entry for final settlement or actual redemption of preference share capital to the preference share holders. In this way, we can pass all the accounting entries in the books of accounts of a company for redemption of preference share capital. Thank you.